In this video, I'll be sharing my personal investing strategy that I plan to execute for the upcoming recession. In my opinion, this could be a once-in-a-lifetime opportunity for you and I to profit instead of getting left behind. We must remember that riches are made in recessions. A few months ago, Bloomberg economics model projects the likelihood of a US recession to rise from 65% to now 100% within the next 12 months. And that has many investors and traders go into panic mode. The stock market has been selling off since early 2022. We're seeing a decrease in earnings and growth across many company reports, a decline in housing sales, and a mass layoffs in the tech industry, with a high likelihood of much more to come. While I wasn't active in the markets during the last recession in 2008, I've studied the data and past trends to make sure I could position myself the right way this time around. To start, make sure to remember to like the video and subscribe. Now let's get into it. A recession is a general slowdown in economic growth. This kind of decline is measured by GDP, gross domestic product. This is a metric used to measure the total value of goods and services produced in the economy. And when there is 2 consecutive quarters of negative growth in GDP, that's considered a recession. We've seen that in 2022 so far, there's already 2 quarters of negative growth. And despite seeing a nice recovery of positive GDP in the 3rd quarter, many economists still suggest investors to stay cautious, as they don't see the short-term growth to persist. That's why as investors and traders in the market, we must still prepare for the worst, but hope for the best. Despite all the uncertainty and high likelihood of various markets like stocks, real estate, and crypto continue to decline more, we must remember that riches are made in recessions. First, let's talk about the stock market and my approach to investing during the recession. Even though you guys know me as a day trader, I still invest in stocks long term for my retirement at the age of 50 next month. While many people and many personal finance YouTubers would say day trading is a form of investing.
Now, for those who aren't aware, day trading is a style of investing in which—
No, it's not! Seriously, every time I hear this, I just gotta roll my eyes. Trading and investing are completely different. Day trading is considered a career and an active business. It's also taxed as a business and not as capital gains in the United States and Canada. Investing, however, means you're buying an appreciating asset, hopefully, for the long term, with the intention of holding on for 2, 3, 5, or even 10 plus years. Every time there's a market correction or a bear market, we see a lot of people trying to time the market, as in their attempt to sell their investing portfolio at the top and look to invest back in once the market has bottomed out. You see, on paper, that sounds like a great approach. However, in reality, it's very difficult to time the bottom of the market. In day trading, we often use certain signals to time short-term bottom on the market intraday. Some indicators I personally use are VWAP, technical double bottoms, and reclaim of key levels. However, that only works for short-term outlook. But when we're looking at potential long-term bear market reversals, that's pretty much impossible to time. Just ask any portfolio managers or economists. In fact, many investors are trapped into the trying to time the bottom game, but freaks out and sells their entire portfolio when the S&P 500 cracks a new 52-week low. Studies have shown that it's more crucial to focus on time in the market instead of timing the market. If you use any compound interest calculator, you can see that just by investing $100 every 2 weeks consistently, with an average return of 8% per year, it will be inevitable for you to become a millionaire. Your investment will have grown over $1.2 million over the course of 45 years, with only $117,000 being the actual cash you've invested. The rest of the $924,000 in gains, it's all compound interest. So for my own personal stock market portfolio, I'm looking to invest 70% of my capital in index funds, with the remainder 30% in individual stocks. Instead of trying to time the absolute bottom on these index funds and individual stocks, like I mentioned earlier, I'm dollar cost averaging in. In my previous video revealing my entire investment portfolio, I showed that I'm invested in index funds like VTI, which invest in large, mid, small cap stocks in the United States. I also plan on adding into other index funds like XDV and XEI, which invest in high-quality dividend stocks in the energy, banking, and utility sector in Canada. I like these funds because they are diversified, passive, and boring, and the management fees are extremely low, perfect for busy individuals like myself who don't want to have to check on the companies every 2 weeks. The remainder of 30% capital I have will be allocated slowly into individual stocks. In the third quarter of 2022, I picked up a few new stocks into my portfolio. They are Google, Microsoft, TD Bank, and Taiwan Semiconductor. And I plan on adding into other existing positions I already have as well, such as Tesla and Apple. If you're interested in following my long-term stock market portfolio and asset allocation, you can do so on the app Blossom. It's a first social investing app in Canada, much similar to Public in the US and Shares in the UK. On there, you can see all my buys and sells. I'm personally invested in this app and looking forward to Blossom being approved as a broker in Canada soon next year. To download the app and follow my portfolio, make sure to use the link down below. My plan is to dollar cost average in. For example, if I allocate $1,000 in total to invest in Tesla the next year, then I'll buy in tranches of 4 buys, each transaction worth around $250 in value. I see the sell-off in the stock market as a great opportunity to pick up some quality stocks for discount. Just like how most people are excited for Black Friday sales, investors should treat the stock market sell-off as the same. My second investing strategy involves real estate, and in my opinion, this strategy is even more recession-proof. While many economists are saying we might see another real estate bubble about to burst, just like in 2008, I highly doubt that's gonna happen, in Canada at least. We have some of the strictest lending regulations in Canada. In order to qualify for a mortgage, home buyers have to go through extremely rigorous amounts of stress tests. So in major cities like Vancouver and Toronto, even though yes, interest rates have certainly gone up quite a bit, supply has not increased by much. So in this scenario, the overall real estate prices will be unlikely to see a crash, like we saw in 2008. However, I think it's still a good idea to take a conservative approach when investing in real estate. Just like what I mentioned about the stock market, be prepared for the worst, but hope for the best. If there's really a decline in housing prices in Greater Vancouver in the next few years, I want to step in and pick up 1 or 2 properties for my real estate investment portfolio. As I mentioned in a previous video, I've dabbled in renting out some investment properties, and that's doing really well. Just like my stock market investments, I have no intention of selling anything. But this time around, I want to look for properties that allow short-term vacation rentals. Yes, I want to try another business model, Airbnb. I know, as if I'm not doing enough already. However, I have to be very strategic about the location to make sure it's going to cash flow and not have too many empty slots in any season where tourism is scarce. And ideally, these vacation rentals will be in areas that I personally would enjoy traveling to throughout the year. Moving on to the most speculative asset class of all, cryptocurrencies. I know, I said in my previous video that I only allocated a very small portion of my overall long-term investment portfolio in crypto, and I was prepared to lose it all. But I didn't think it was actually going to happen. I rarely check my investment portfolio values, but the last time I checked my crypto holdings, I was down about 60 to 70%. Whew, that's not really fun. Many of my friends are asking me if I plan on adding even more into Bitcoin and Ethereum during this major sell-off. And to be honest, I am not. In my opinion, cryptocurrencies will take many more years to consolidate before seeing any meaningful reversal. With what transpired this year with some major exchanges collapsing, like FTX and Voyager, and all the scandal that got unveiled, I think it will take the crypto markets a long time to regain trust from investors again. So no, I'm very happy to just hold on to my existing investments in Bitcoin and Ethereum, and I don't see myself adding any more in the foreseeable future, unless we see some actual signs of sentiment shift in the next few years. Let me know what kind of asset classes you're looking to invest in a recession. Are you looking at stocks, cryptos, cars, or real estate? Remember, if you'd like to follow my long-term investment portfolio, you can do so on Blossom, a social investing app in Canada. Now, you've seen my long-term investment strategy for the new year, but if you're interested in my short-term trading strategies that I use to generate profit in a bear market, then make sure to check out this video. I'll see you there. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next time.